please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Priya, hello and welcome to India Business Hour. I'm Ronaja. Kritika joins me from Mumbai. Good evening, Kritika. It was back in 1997. H.D. Devagowda was the Prime Minister then who went to Davos. A lot has changed. The Indian economy is transformed now in these 20 years, Kritika.
Oh, absolutely. And, you know, I think that's exactly what the Prime Minister Narendra Modi's speech is going to be about. How we have changed, what lies ahead, the India growth story. Right after GST, lots to talk about. And as you said, that is going to be the top focus on India Business Hour today, the World Economic Forum. But let's actually go across to ground zero, where Shireen Bhan is there getting us exclusive interviews, top business voices, freezing on the side at that. Let's go across to her for a quick update. Shireen, over to you.
Well, it's that time of the year when all roads lead to Davos. We're here at the World Economic Forum's annual summit. We're snowed under, but we promise to bring you all the action. Prime Minister Modi is going to be addressing the opening plenary, the first Indian Prime Minister to do so in almost 2 decades. There is a lot of focus on India. There's a large ministerial delegation, a large corporate delegation. We'll get you all the behind-the-scenes action, so stay tuned to CNBC TV18.
Well, thanks very much for that, Shireen. I'm happy that I'm nicely ensconced in my warm studio. It seems to be a lot cold out there. Let's quickly take you through all the top stories we've been tracking through the day.
Then we are systematically going about restructuring some of the other businesses.
Tata Sons chairman N. Chandrasekaran lays out the group's roadmap for 2018, says this will be the year of restructuring and growth for the Tatas.
We've been pretty happy with where we are, but long way to go.
Focus on commercial vehicles is working for Tata Motors, says N. Chandrasekaran, but adds that the auto major needs to do a lot more. Also says Tata Group is looking to simplify its consumer retail business.
Bulls continue the record-breaking spree. Both the Sensex and the Nifty hit fresh lifetime highs. Tech stocks emerge as top gainers as buying is seen across the board.
ONGC acquires HPCL for around 37,000 crore rupees. Market rewards ONGC for making the acquisition at a lesser than expected price and without an open offer. HPCL ends the day down over 3%.
The success with the HPCL-ONGC merger may prompt a shift in the government's divestment strategy in FY19. Sources say one can expect more mergers between public sector enterprises and even buybacks as the government makes unlocking value a priority as it targets a divestment mop-up.
Private sector lender Axis Bank reports a stellar set of numbers for the third quarter, beats expectations on most parameters, reports a sharp improvement in asset quality. Stock ends the day up around 4%.
The International Monetary Fund releases its World Economic Outlook, maintains 2018 growth guidance for India at 7.4%. Global growth is estimated to be revised upwards to 3.9%.
Delhi Chief Minister Arvind Kejriwal alleges conspiracies by centre as President approves disqualification of 20 AAP MLAs. The party moves Delhi High Court but withdraws its first plea, expected to file a fresh petition.
A new 3-judge bench headed by Chief Justice of India Deepak Mishra will begin Loya death case hearing on the 2nd of February. The court says it will assess everything dispassionately and will examine news reports. There won't be any gag order against media in this case.
Well, let's start India Business Hour with the top interview from the World Economic Forum. 2018 will be a year of restructuring and growth. That's the message from Tata Sons chairman N. Chandrasekaran. He spoke to Shireen Bhan at Davos, where the World Economic Forum is set to kick off. Chandra identified consumer retail and infra as 2 areas where he sees opportunities to consolidate. On Tata Motors, Chandra believes that the commercial vehicle strategy is working well for the company and he's happy with the company's progress. However, he also added that Tata Motors still has a long way to go. Shireen did ask Chandra about the government's move to allow 49% FDI in Air India and if Tata's and Singapore Airlines will launch a takeover bid. Chandra chose to keep the cards as far as Air India is concerned close to his chest. Here's a slice of that exclusive interview.
Chandra, appreciate you joining us here on CNBC TV18. Last year when you were here, the announcement of your taking over had been made. You hadn't officially taken over. It's been quite a year since then. Before I talk to you about Davos, let me ask you about the year that's been at Tata Sons.
Yeah, it's been a good year, year full of satisfaction. I think we have embarked upon a number of initiatives. We've looked at building the right team. And as I mentioned to you in your interview,
yes,
we had identified the important issues to put behind, and we have addressed some of them, rather the most critical,
which is the telecom
ones of them,
piece.
telecom, then we have addressed the steel, and all these transactions will conclude in 2018. Then we are systematically going about restructuring some of the other businesses, and also we just announced our expansion of our steel business. We cleared about 23,000 crores of investment for expansion in Kalinganagar over the next 3-4 years. We're looking at stressed assets, and we're doubling down on Tata Motors. And we are work in progress with respect to the themes of simplification, synergy and scale.
Yes, several things that you've talked about there. So in a sense, if 2017 was a year of review, assessment, 2018 is likely to be the year of restructuring, so to speak?
I think it will be a combination of restructuring as well as focusing on growth. Clearly, we have 6 or 7 verticals we've identified, apart from steel, motors and TCS. Definitely consumer and retail, financial services and infrastructure.
The market seems to be excited about the consumer-facing businesses in hope and anticipation that there is going to be some significant changes there. Is that accurate?
I think, we are looking at it very deeply because there is a significant opportunity for the group, considering the brand and the consumers that we already have, a very large customer base. There's a lot of synergy. So we're looking at that, and we are also trying to see how we can leverage digital in that segment and other segments. So I think lots to do.
So what would be the priority when it comes to the consumer-facing businesses? For instance, whether it's Tata Global or it's your retail business, etc. What is the overarching vision that is going to define the way that you go about these businesses?
I think each one of these areas will definitely have the same themes play out. Simplification will be a theme that will play out. Consolidation will be a theme that will play out wherever it's possible.
Is it possible in the IT businesses? Because that was a question that I last asked you, and that seems to be again something that the market is anticipating, whether it's Tata Elxsi and so on and so forth. There's a lot of activity around those stocks.
See, in the IT business, TCS is a very, very large player. And other players we have are small and they are focused on niches, and that's not an area I'm ready to comment upon. But in many of the other businesses like consumer, retail, etc., we need to see, because some are listed companies, some are unlisted companies. So how do we bring the power of the group together is something that we are looking at, multiple options at this point.
Do you start addressing the cross-holding issue as well in 2018?
Yeah, see, I think simplification means many things. Removing the cross-holding is one of them, which we have done quite a bit, and whatever left we will complete. Consolidating is another option, where sometimes we may feel that couple of companies.
Which is the vertical that you see ripe for consolidation, most ripe for consolidation today?
Whether it is ripe or not, the verticals I think the consumer retail and infrastructure, these are areas in which there's a lot of opportunity, and we need to pay attention, which we are looking at.
Let me then ask you about the outlook as far as growth is concerned. 2018, by all accounts, indications are that the green shoots are starting to show up. How confident do you feel about growth and the India story?
I think I'm pretty confident. I think India is poised for fantastic growth in 2018 and 19 and beyond. Many of the actions, the policy framework that government has put in place, whether it's GST, whether it's bankruptcy code, or some of the other initiatives like the Digital India, etc., will all play out because they are very structural reforms. And I expect to see significant growth. We're already seeing it. If you see our commercial vehicles market, or if you see our presence, even companies like Titan, many segments we already see there is tremendous opportunity for growth.
How satisfied are you with where things are at Tata Motors? Because that again was a focus area that you spoke of in October when we last met.
I think what we have done this year, I'm extremely happy. I think the focus that we have brought in terms of commercial vehicles, where we really are going for market share gain, as well as operational improvement, is working very well. And passenger cars also is doing well. I think Tata Motors domestic market has been an area where there is a lot of action, and I've been pretty happy with where we are, but long way to go.
You know, the Prime Minister is going to be here addressing investors. A, what to your mind is going to be the key message that investors want to hear from him, domestic or foreign? And B, ahead of this, we saw another bunch of FDI proposals being cleared by the Cabinet, including 49% in FDI for Air India, ostensibly to pave the way for its disinvestment. Is your partner, are you ready now with a formal expression of interest for Air India?
I think I don't want to comment on any specific proposals, but as I said, the reforms that have been put in place over the last 3 years are pretty significant. I think all of them are ready to play out. They are very structural in nature. I think the only message I would feel that will be required is to reinforce that we will make policy changes, we will continue on that path, we will do the right thing in order to address the core issues that face the country, and we are on a path and we will continue on the path. Reinforcement of that.
Air India?
I mean, I'm not ready to comment on it
okay.
At this point.
All right, Chanda. Thanks very much for your time. Appreciate you joining us here in Davos. We wish you the very best of luck, and thanks for your time here today.
So, and Chandra there at Davos, not willing to comment specifically on Air India, but clearly laying out his growth priorities for the year 2018. Our Davos coverage continues. Shireen now joins us live with another set of guests. She has Sanjay Nair of KKR India, Manish Kejriwal of Kedara Capital, and Rajiv Lal of IDFC Bank. Shireen, over to you.
Quite literally snowed under here at the World Economic Forum's annual summit in Davos, but a sector that's been looking very, very hot is the financial services sector. The equity markets have been very hot as well. The IPO markets have been rallying, not just in India, but globally. So I've got three very special guests here joining me, braving the snow. Sanjay Nair, Manish and Rajiv Lal. Appreciate you joining us here on CNBC TV18. Let me start by asking you, Sanjay, yes, are you good to talk now? Okay, all right. So 2018, do you expect the momentum to continue? I mean, it was a fabulous year for the equity markets, for the IPO markets, for private equity. Do you believe the momentum is likely to continue? I'm stumbling on my own words now.
I think so. I think the momentum will continue because, frankly, there's so much money coming towards emerging markets and India. So I think a lot depends upon just what happens in the US. But frankly, I think for India, the earnings need to catch up. I think we are getting ahead of the earnings. So I think what's important for India is to really see if the earnings can catch up.
But do you believe that we are on the cusp of seeing an earnings revival?
Just seeing very, very few green shoots. But, we have seen those sort of before and then they kind of fade away. I think this government is doing some structural reforms. Until those play out, I think it's going to be a little bit longer.
What is the structural reform that you're most excited about? I mean, your chief has met with Prime Minister Modi several times over. What's the message that foreign investors are looking to pick up on here at the World Economic Forum from Prime Minister Modi?
I think the structural reforms, what they've already done, are actually quite a few. And they were the right ones to do in terms of taxation and some of the stuff on the bankruptcy code, which is very commendable. But I think going forward, they need to really figure out what they're going to do with the banks per se, not just a recap, not just
100% FDI in banks, a proposal. We don't know if it'll go through or not. It's been doing the rounds of government for the last few years. It might be back on the table is what we're given to understand. Good idea, bad idea?
I think it's a great idea. I think there's no reason to own any business by the government. And I think Prime Minister Modi has said that.
No, it doesn't mean the government is going to get out.
Yeah, that's okay. But I think they don't have to be morally and sort of financially bound by putting money into the banks. And I think Prime Minister Modi has said again and again, they have no business to be in business. I think that's a big reform. I think they've got to really divest some of the public sectors. The fiscal is becoming a structural issue. So until they resolve that, I think... it's, as I say, India grows by night, and the micro story is pretty strong. I think the macro is good in the context of where we are. So I think we got another solid couple of years ahead of us, and hopefully things will get better. But I must say that where we are today, things are pretty good. And I just don't like the idea of talking in the snow. But why do you?
Yes, I'm going to give you a breather and torture Manish instead. And Rajiv, don't go too far away from us. So Manish, 2018, do you believe that private equity is going to continue to have the great year that it did last year?
You know, listen, I think last year what really happened was valuations were high. But that allowed a hell of a lot of exits to happen. What was the issue with Indian private equity? We didn't have exits. Last year, with a spate of IPOs and a spate of sales to strategics, we've actually had exits. So I think what's going to happen in 2018 is if the markets continue to be as buoyant as they have been, the spate of exits continues. We ourselves had 3 exits last year.
Are you getting worried about the state of the markets, though? Because everyone's talking about valuations being stretched and so on and so forth, not just in India, but globally as well. And some think that this is a symptom of overconfidence and perhaps that could be the start of a shakeout. Are you in that camp?
No, listen, I think it goes back to earnings. Right now, the stock market has run ahead of itself, not only in India, but globally. Yeah. In India, I think we're seeing the first green shoots. You saw the Unilever results in India. First dramatic improvement. You see GST and demon effects sort of settling down. I think if you keep seeing the effects stabilizing and growth coming and earnings growth coming, I think we'll have a great year ahead. Having said that, the macro and where oil prices are is a bit of concern. But I think at an overall level, what you will see, as I was saying earlier, is a lot more exits, probably people being a little bit more hesitant in making new investments when banks are trading at 4 or 5 times book.
So you've raised a significantly large fund. What are the sectors that you're going to be looking at?
You know, Sharon, you know this, we're pretty sector agnostic. We look for situations where there are great management teams, there's tons of them, and our model is slightly different. We do more control deals than minority deals. So to the level we can get good companies at a relatively cheap price, which is a complete challenge these days, it's not going to be that busy. But so what's that's seen us doing is moving along the spectrum, taking on a bit more risk than we were taking earlier. You can't get the same company at 2 times book. These things are now trading at 7 or 8 times book. So you've got to change your approach a little bit, take a bit more control, go down the risk curve a little bit, and try making your same returns.
So the pipeline looking robust in 2018 for you?
Pipeline looking very robust. Both the exit pipeline looking even more robust than the entry pipeline, but even the entry one, we're looking at a variety of things. But you know, these things, you keep working on them. And at the end of the day, there are tons of companies we like, great earnings momentum, but the valuations, even in the private markets, are a reflection of what's going on in the public markets. Given that, it's not easy to close something in this stage, but we're working hard.
Well, a man who's been working hard, Rajiv Lal, congratulations on the deal with Capital First. And what can we expect now in 2018 to start with? How soon do we expect the procedural issues with this merger, especially in the context of what we saw happen with Shriram Transport, go through this time around? Shareholder concerns on giving the deal a thumbs up?
No, so this deal will take a few months to navigate. We have to go through the regulatory approval first, so that will take 2-3 months, and then the NCLT process and shareholder approval. I obviously believe that it's a very good deal, so I don't think shareholder concerns will be an issue. This is great for all stakeholders concerned, Capital First as well as IDFC Bank. Constructive story, very rapid retailization of the book, improving margins, much greater ability, therefore, to accelerate the pace of our CASA rollout, which, independently of the transaction, has been gaining momentum and traction. So quarter on quarter, our execution is gaining significant traction. CASA has grown 1,000 crores just in one quarter. I expect that to continue for several quarters. So things are looking constructive and good as far as I'm concerned.
And 2018, you think, will be or continue to be a year of consolidation, especially in the financial services space and the, this NBFC sort of theme that's been playing out? I'm going to get both of you to comment on that as well, but let me start by asking you.
Consolidation, so I don't know. Valuations will be always challenging for acquisitions and consolidation. But yes, the theme of going down the risk curve to a new segment of customers, new to bank, to open banking to them. That, I think, is a theme that has long legs, with many years to run.
100% FDI in banking, if at all it gets taken forward. Good idea, bad idea? Sanjay believes it's a good idea. What about you?
Definitely a good idea. More capital. The financial sector needs capital. There's not enough of it domestically. We need to open foreign doors to get the requisite capital. So it'll strengthen the banking system overall, and that's what we need. That's one of the most important structural reforms. For my money, this government's recapitalization of the banks, very fundamental shift of gear.
For KKR specifically, what is it that looks good for you? Of course, the India reception is slated for later this evening. It refuses to stop snowing. This is the worst that we've seen here in Davos. Amitabh Kant, a veteran of many World Economic Forum sessions. Sir, have you seen the snow as bad as this?
Well, I think it's the best you've seen in Davos. You know, it's absolutely surreal. You know, Davos is looking wonderful. It's a unique experience. I've never seen it. It looks so unique and so beautiful. It's white all over. It's snowing all over. And I think we're all getting drenched in snow, but it is beautiful. I mean, it's a different experience.
It is.
Yeah.
But let's talk about Prime Minister Modi's visit here. What is the importance of his visit to Davos? I mean, he does meet with global investors. He's visited every important geography, every important market. Why the decision for the Prime Minister to attend the World Economic Forum's annual meeting, something that an Indian Prime Minister hasn't done in almost 2 decades?
Yeah. Well, firstly, he's the keynote speaker. He's virtually inaugurating the Davos conference tomorrow, and he's followed by a vast number of global leaders, including President Trump, Macron, so on, many leaders of the world who are coming here. And he's carried out very many structural reforms in the Indian economy, I mean, with far-reaching implications. He's pushed for one tax across the country. He's pushed for digital payments, demonetization. He's pushed for a more inclusive society. He's opened up the foreign direct investment regime. FDIs have grown enormously, and I think almost 98% of the FDI coming through the automatic route. And I think more than that, he's pushing for. He's also done all this with a lot of fiscal responsibility. We've been a very fiscally responsible country, and now he's pushing for disinvestment, including Air India. So all this needs, the story of India, the unique story of India needs to be told to the world. And how aggressively India has pushed for structural changes. No other country in the world has been able to do this and done it with growth. So I think this is a remarkable story which needs to be told to not merely global leaders but to CEOs from across the world.
So what is on the agenda for the Prime Minister? There is an India reception where he will be meeting with global leaders as well as domestic business leaders as well. I would imagine that there are other bilateral meetings that the Prime Minister will attend. What's on the agenda?
So he meets all the top CEOs today. I mean, the global top CEOs and Indian CEOs today over a dinner which is being hosted by the IPP. And then he delivers the plenary keynote address tomorrow morning. And subsequently, he does the IBC. That's all the CEOs who really manage the World Economic Forum, and that really comprises of all the top CEOs of the world. So he manages to meet everybody. In addition, he does a couple of bilaterals with the Swiss president, etc. So, I mean, it's he actually interacts with just about all the top CEOs of the world here. I mean, this is a great opportunity to tell the India story, which he will be doing, I mean, at great length. So he'll be responding to some of the issues which the CEOs will raise with him. But he's addressed all the major issues relating to India in terms of a vast range of structural reforms across. And I think we are now accelerating the speed of our own growth. Very few countries have carried out such major reforms and not been slowed down by growth. But we've not merely managed to maintain the status quo, but now now we'll be accelerating it further. And we are doing this with a lot of financial inclusion, all about spreading electricity to our villages, providing houses to our poor people, because that's where you need to create the demand. The challenge is about creating demand. And I think the forthcoming budget you'll probably see a lot of that action.
Since you spoke of the budget, and the Prime Minister has said that the government will continue to pursue the path of fiscal consolidation, so we shouldn't expect necessarily a populist budget, but there will be measures to address the distress of the agrarian economy, which should be the case. What else would you like the budget to focus on? As part of the Niti Aayog, what would be the key recommendations for the budget?
I think a vast range of areas we need to push for. The Prime Minister has been talking about doubling farmers' income, and therefore you need to do a vast range of things, including ensuring that the agricultural markets, in terms of ENAM, work. The Prime Minister will be pushing for housing for all, which requires additional resources. The Prime Minister should be pushing for ensuring that all the villages get electrified, and under the new scheme ensure that the new houses, the additional houses, get electrified. But more than that, he's pushed for Swachh Bharat. There's been a remarkable achievement in terms of ensuring that every household has a toilet, every school has a toilet, every girl child school has a toilet, and these are remarkable things. But I think we need to, the budget will look at a lot of other areas, but one of the key things is that this government has also pushed for reverse BOT, that is roads which have been, because there have been lack of interest in private sector investment, the government is pushing for privatization of roads which have already been made. And the demand has been so enormous that from the roads that are being sold in the first lot, we expect over $1 billion worth of revenues to flow into the government. And similarly, Niti Aayog has recommended and the cabinet has approved disinvestment of over 30
yes, but we still haven't seen any of those go through.
I think a lot of, when you're selling public sector enterprises, which Deepam is doing, the Department of Public Asset Management is doing, you need to do it in a very transparent and competitive way, and they've done it in a very systematic, and I want to appreciate the work which has been done in a very systematic manner. All transaction advisors are in place, and you will soon have a lot of action on that front.
Okay. One final question, sir. Since you were behind the Make in India policy, and now what we've seen is the government, through its procurement policy, is asking whether it's government or other operators to prefer or to push for local companies. Yes. So is that likely to send out contradictory signals to foreign investors?
So, we believe that we are in a globalized market. You need to be a very integral part of the global supply chain, and that's why we've opened up our FDI regime. No other country's opened it to this enormous level. You have to be a part of the global value chains. But what's happening, Shireen, across the world is that countries across the world are protecting themselves. You look across all over Europe, you look across America, countries are protecting themselves, becoming, the export-led growth, which was the hallmark of the 70s, 80s, 90s, that has got impacted because of protectionism. And it's very necessary that India takes care of its own enterprises. It can't be that the rest of the world closes their economy and we keep opening ourselves fully. So we need to ensure that our companies which are manufacturing to global standards, at least those which are producing to global standards, their procurement takes place under the Make in India regime. I mean, just to give you an example, if metro coaches are being made by Bombardier, Alstom, etc. in India itself, including BHEL, then there's no reason why we should import metro coaches. They should be procured from manufacturers in India. And whoever wins the bid should actually do manufacturing in India. That's the objective of the procurement policy. That produce to global standards, manufacture in India, and penetrate the Indian markets.
Well, we will let you go, sir. Before you catch a chill, appreciate you joining us here on CNBC TV18. Thanks very much for your time, Mr. Kant. Appreciate it. Thanks so much. Well, with that, it is time for us to wrap up this CNBC TV18 special from all of us here. Goodbye. Thanks for watching.
Welcome back onto the day's market action now. It's the start of a new week, but Dalal Street seemed to have taken off from where it left last Friday. The markets today shrugged off any signs of Monday blues with a stellar rally across all indices. The Nifty hit a fresh high yet again, gaining about 70 points and trade through the day. The index is now at a kissing distance of 11,000 level. Meanwhile, the Sensex 2 followed suit with a 280-point smart gain. The mid-caps came in late to the party though, but still ended with gains of 1%. The Nifty Bank saw a mild underperformance with gains of about 0.5%. That's all the action from Dalal Street. But the big headline from the Deal Street, shares of ONGC soared in trade while HPCL saw a sharp dip earlier today. This after ONGC acquired over 51% stake in HPCL. The acquisition has been made for a total of around 37,000 crore rupees. So that's a big number, but that is below what the market had expected. Also, ONGC is not going to make an open offer for HPCL. Well, this has come as a big boost for ONGC shareholders. The deal has brought some cheer for the government as well. The completion of this mega deal has helped now the government exceed its FY18 divestment target of 72,500 crore rupees. Earlier today, we caught up with the managements of both the companies, and here's what they had to say on that mega deal.
Part of this funding we'll do it from our internal accruals. Then, as you rightly said, that we have stocks of IOCL and GAIL. And apart from this, we have taken required approval from the board for short-term borrowing. We have tied up all these the borrowings with different banks. So, you know that the stocks together we have something like 25 to 30,000 crores. Banks, we have tied up close to 50,000 crores of short-term borrowing. As of now, we have all these options open. First, we'll definitely access our internal accrual, how much, whatever amount we decide we can spare, and thereafter we'll work it out, whichever works out beneficial for us.
Seller and the buyer has done their due diligence and have come to a conclusion on the share pricing, and I think there is an agreement between the seller and buyer to consummate the deal at that price. It helps us in bridging the marketing and the refining gap if MRPL is integrated with HPCL. It will also bring the optimization in the crude purchase, the logistics, the midstream disposals, as well as the product slate. The second point is that HPCL is also going to have a substantial petrochemical portfolio going forward. Along with MRPL, they've got OMPL, OPAL, etc. It provides us consolidation in the petrochemical space.
Okay, speaking of government divestment drive, the countdown to February Fest has well and truly begun. In less than 9 days, the Finance Minister Arun Jaitley will table the Union Budget for financial year 19. And from what we are picking up from our sources, the government is gearing up for a paradigm shift as far as divestment policy is concerned. We learned that the government might set a higher divestment drive for itself for FY19. Sapna Das is here with exclusive details. Sapna, what are the numbers that you're picking up?
Well, clearly, the HPCL ONGC deal has been a huge success for the government and a big boost for its disinvestment program. That clearly sets a precedent for what we may expect in FY19. Also, in terms of what the budget announcements may be, in terms of the target the government may have actually already been allocated, since the budget documents are already now under printing. Having said that, clearly the intention of the government is now to create value for CPSEs. Unlocking value for them, also creating value thereby for government equity in these CPSEs. So the expectation now is that probably the consolidation and acquisition policy the government has implemented in FY18, this may get a further boost in FY19. Also, very clearly, those CPSEs who do have surplus cash, here the investment guidelines had been put out by DPAM quite some time ago. All those CPSEs, either they expand and they use it for the business purposes, or they also come back in the shape of buyback. So the second aspect of the disinvestment policy will be on that front. The third aspect, and that is linked to the first one, basically, the budget targets may be evenly balanced between strategic stake sales and and minority stake sales. They could be a bit more focused in terms of the strategic stake sale, and that is something that we have to watch out for. Fresh offerings also may be a part of that, though of course a couple of them are still pending in the current financial year. So you have to wait and watch and see how that really goes. Last but not the least, when they have already exceeded FY18 target in January by over 20,000 crores, they are sitting above 91,000 odd crores, so to speak. There is no reason to basically question the fact whether it could be a 1 lakh crore disinvestment target for FY19B or not. And even if it is not, the fact remains that this year has set the ground rule, has set the precedent. They may have a lower B and try and overachieve it by the end of FY19.
All right, many thanks, Sapna. So government taking some heart out from the ONGC-HPCL merger. Lots more in the pipeline. Time for us to quickly slip into another break here on IBH Plus, but lots more lined up. Don't go anywhere.
Welcome back to India Business Hour Plus, continuing our coverage of the World Economic Forum. Let's cut across to Shireen Vahan, who is in conversation with Chetna Sinha, co-chair of the 48th World Economic Forum and founder of the Mandeshi Foundation. Shireen, over to you.
Live from the World Economic Forum in Davos. The theme for the annual summit here at the forum is creating a shared future in a fractured world. And for the very first time, the World Economic Forum has decided that all the co-chairs for the summit this year will be women. And one of them is here with us representing India, Chetna Sinha. Thanks so much for joining us. Of course, the founder of Mandeshi. Appreciate you joining us here on CNBC TV18. And I have to say, she's braving several feet of snow in a sari and snow boots, putting all of us to shame. But congratulations on being one of the co-chairs. What does this mean to you personally?
So, being a co-chair at World Economic Forum, I see myself as representing the voices of fractured world. I'm here to bring the voices of the rural women of India who has been brave enough to set up their enterprise, looking for the income generation. And here the voices I'm bringing is of those women who actually motivated me to set up the bank. Mandeshi Bank, the first rural women bank. And why this bank was set up? Because women wanted to do savings. They were not asking for grant or subsidy, but they wanted to have a place where they can save their money as a safe and secure. And this whole homegrown bank with no outside support, which is covering around 100,000 women. And Mandeshi has been working with these women, and now we have 500,000 women who are not only just
Okay, we will cut across back to that interview. We have lots of voices, exclusive interviews lined up for you, but very short break. News and updates and exclusive conversations from the World Economic Forum will continue on the other side.